Hi, folks. Rick Wedell here. I'm the Chief Investment Officer at RFG Advisory in Birmingham. Today is Friday, February 12th, and we thought we'd come to you with a brief market update and just kind of let you know what we're seeing out there. It's a relatively calm day. We're headed into a holiday weekend. Happy Valentine's Day, everybody. And perhaps maybe people have checked out a little early. It's a little bit of a slow news cycle, but long story short, it's a little quiet out there. We are currently at 3920 on the S&P 500, which is basically at new highs, driven by the same factors that we talked to you about last week. We continue to have a sort of an all signals green type of market, driven by three key factors. One is continued recovery from the virus, increasing vaccination rates, this knowledge that as warmer weather gets around the corner, that we'll continue to see the economy reopen and economic activity resume normalcy, whatever that new normal will look like. We continue to see a very accommodative federal government. We have the House Ways and Means Committee yesterday approving about a $500 billion stimulus package, or at least pushing through about a $500 billion stimulus package, which would provide direct monetary support, another round of checks for U.S. consumers, which is generally viewed by the market as a positive. And then last but not least, we have a very supportive Fed. Chairman Powell gave a speech on Wednesday in which he commented that the labor market still had a long ways to go to recover. We saw that in the sort of midweek employment data, and that's being interpreted by the market to mean that the Fed will be on the sidelines in terms of trying to do anything to quell the recovery for quite some time, which is very supportive. All those things work to support the market and push equity valuations higher. We are in the middle of earnings season. Earnings season actually continues to go very, very well. This is companies reporting fourth quarter earnings, as a reminder. And on average, we've had about 370 companies report so far out of the 500 in the S&P 500. And to date, those earnings are up at about 6.5% year over year, which is quite impressive. If you think about the fourth quarter of 2019, the unemployment rate was significantly lower than where it is today. We didn't have any virus-related restrictions. We were sort of still in the go-go days of late 2019. And the fact that we are able to post earnings growth in the fourth quarter of 2020, despite the sort of headwinds that exist from a macro perspective, is really quite positive, and I think is one of the reasons why you're seeing as much strength in the equity market as you are. As always, there are always concerns when the market hits new highs. Valuation being one of them, people feeling like we may have come too far too fast. But in general, I would tell you that markets tend to climb walls of worry. It's not uncommon for us to see some consolidation or maybe even a small pullback after we hit a new high. But in general, as we talked about before, all signals look pretty green for risk assets. With that, I do hope you have a happy Valentine's Day. If you have any questions, as always, please feel free to reach out to your advisor or to me directly, and enjoy your weekend, and we will talk to you next week.